Welcome to Crowded Market Report by Jason Shapiro. If you want more from Jason, subscribe to Crowded Market Report and get access to the CMR community, weekly reports, charts, and other exclusive content. Learn more at www.crowdedmarketreport.com or click on the link in the right corner.
Hello, today is Saturday, October 14th, 2023. I am Jason Shapiro with CrowdedMarketReport.com. Today I was going to speak about the concept of news failure, and I know that I have spoken about this in previous videos, but I get a lot of questions about this, so I thought I'd go over it. So what is news failure? You know, what it means is, like, if a market's been going down, specifically on some news that you can follow, like let's say stocks are going down because interest rates are going up, and then some news comes out that supports that, and the market probably goes down, and then it reverses and closes up on the day. That's the market rejecting the news, right? Sort of like, you know, sell rumor, buy fact type of thing, and that's really what a news failure looks like. But for me, for my purposes, there's only one news failure that matters. First of all, for a news failure to matter to me, the first thing that has to happen is the market has to be showing that it's crowded one way. So if I'm looking for like a news failure like that, bad news, and the market closes up, I'm only looking for it in markets that are showing speculators massively crowded on the short side, and obviously the opposite for markets where speculators are massively crowded on the long side. So that's the first thing. News failures happens all the time, randomly in the middle of trends and all that. I'm only interested in picking turns, and I do that by looking for massively crowded positioning. So it only matters to me on markets that are massively crowded, first of all. And second of all, it only matters to me on that turn day. Okay. After that day, the markets go up and down, and there's different kind of reactions to news. It's not really relevant to me. It might make for interesting conversation, but it's not relevant to me. The only relevant thing to me is in a crowded market where there's a news failure right at the turn, and that's where a tradable event is for me. Okay. So the reason I bring this up is there were a few examples in the last week or so that we can go through to take a closer look. So coming in last week, there were three markets that were set up as massively crowded, according to the CFTC COT data and how I look at that. Those were Dow, gold, and Swiss franc. So the Dow, as you can see here, shows commercials massively long, speculators massively short, okay? And what we had on Friday, which was here, okay, last Friday, was a employment report, which was super strong. And we know that, in particular, since the highs in August, interest rates have been going up. This has been seen as bearish for stocks. We had a massive upside surprise to the employment report, which was bearish bonds. And in fact, bonds went down. Okay, and should have been bearish stocks, and you can see that stocks made new lows there, but reversed and closed up. There's your news failure. There's your tradable event. If you're looking to get long Dow, that's the place to try and do it. And what I do, doesn't mean it has to be what you do, but I will buy that, and I will stop. My stop will be the low of that day, and I will either ride it higher successfully until this COT stuff goes back to neutral, or it will go down and it will stop me out, and I'll take my small loss and I'll move on. But that's how the news failure looked, okay? And I want to say something here. A lot of times people are like, hey, Jason, do you think this is a news failure? Do you think that's a news failure? If you have to ask, it probably isn't, is what I would say. It should be obvious, right? That number last Friday, the employment report, was obvious, okay? It was like so much higher than expected. Bonds went down a lot. And the stock market, based on what has been going on lately, should not have been up. And it was. That's a news failure, all right? It should be as obvious as can be. Gold, okay, here's the COT, right? You can see this is the least short, and this gets into the gold thing where commercials are essentially always short and speculators are always long, but this is the least short that you can see gold has been. And the other times were here, right? Arguably here, and now here, right? So it was the same thing on Friday. Same news failure, right? You had the massive employment report. That's inflationary. Inflationary means bonds go up. And what's been going on, you can see, as bonds have gone up, gold has gone down. But on this day, bonds went up. And by the way, dollar went up, which is also seen as bearish gold. And gold made new lows, turned around and closed on the highs and up on the day. So if you're looking to be long gold, that's the place to buy it, right? Now, it worked great. A war came out, that was unexpected. We didn't know that on Friday, but it's not about predicting whether an unexpected war is going to come out. It's about getting into a risk-reward situation, right? And waiting for the market to confirm that with the news failure first, right? Which is exactly what it did right there. So you got lucky, the war came out, they squeezed gold. But that's the point. They're so short that they could squeeze gold, so the risk-reward gets in your favor, all right? So that was the gold news failure. And then you had the Swiss franc, okay, where you see commercials are super long, speculators are super short. Well, this one to me happened the day before the employment report, right, which was here, right? Because the day before the employment report, we had the same type of thing going on. Bonds were getting crushed, right, which is bullish dollar. And the dollar index was in fact down on the day. But the Swiss franc, for some unknown reason, closed up on the day. So that's what I like to call correlation failure, and it was a pretty obvious one because the dollar was up on every currency that day other than the Swiss franc. And it should have been because bonds were getting crushed again, right? And yet the Swiss franc closed up. So I see that as the news failure for that day. And if you didn't believe that one, then you go the next day where the employment report came out, which again was super bullish dollar, and the Swiss tried to go down and it didn't. It closed up on that day too. So it's sort of a news failure there too, but I preferred the news failure the day before. So that's kind of how the news failure looks. And like I say, it's only valid for me, for what I do at least. It's only valid when markets are crowded. It's only valid that one time at the market turn. After that, it's just randomness. There's plenty of times where, hey, a trade maybe is in your favor, and you get a piece of good news and the market sells off and you're like, oh, that's a news failure the other way. That ends up being randomness. All right, we're looking for the non-random event, which is at the market turn, and because that's what gives you the good risk reward over time on these trades. They don't always work, but when they do, they tend to work very large because people are super short and they get squeezed. But the news failure thing is the trigger. And that's how to look at it. And I will say it again. If it's not obvious, if you have to question it, then it probably isn't news failure. A lot of times, especially if you've had a trade using this COT type thing that has worked, you obviously want that to happen again. And so you're looking for news failure, making up reasons to call it a news failure so you can get on the same side as COT. It's a bad idea. COT is not the greatest predictor in the world, but it is a great risk manager, right? And it can put you into situations that have potential high reward relative to risk, but it's not the greatest predictor on the planet. Although you can see here, look, this is where the last time they were super short Swiss franc was down here, right? And now they're there again. So the point is, don't push the news failure thing. Wait for it. Just like everything, you got to be patient, right? Don't push it. Wait for it. Let it be obvious. That's how news failure works. So hopefully that helps explain the whole news failure thing a little bit better. I'm always happy to hear questions or comments. I would like to say one thing this week, given the geopolitical situation, and I don't want to rant on it too much, but I've been having, and I'm speaking to myself, I think, more than anything else here, but hopefully some other people can benefit from this as well. I've been having some trouble with this whole thing, forgetting about the whole moralistic thing about war and killing and all that. I just get pissed off because my government takes a huge amount of what I earn, okay? And forget about the money side of it. I work my ass off, and they're on my back for a huge amount of the year, taking their take. And then they take that money and they spend it on bombs to kill people with. And they steal it, and this whole military-industrial complex scam thing. And it just pisses me off a lot. And it's been bothering me. But one of my friends helped me to think about it in this term, and hopefully this will help other people. Count your blessings, right? Be glad. I don't know where you are, obviously, but be glad that you're not in a place where bombs are flying over your head right now. Be glad that you're not trying to find a refugee camp where you can get food and shelter, right? Be glad if your children, hopefully, are healthy. If you are healthy, right? Be thankful and count those blessings is what hopefully can help us get through the depression that can come on based on the grossness of the world and the grossness of these governments that don't really care about anything but their own power and money. Okay, so on top of that, I hope that everybody has a profitable week this week. And we hope to see you on crowdedmarketreport.com. All right, thank you.
Subscribe to Crowded Market Report by Jason Shapiro.